Let's check on the futures on this fine Sunday evening. Hey everyone, feeling better. Thanks for the wishes, I appreciate it. And the stocks, the futures on the S&P, we'll start with that, are winding tight. So it feels like it's gathering energy for a move up or down. We don't know yet, but the default has been up, right? So you could decide that it's up. For me, I would wait for clues. However, the bulls do have the advantage not only from the momentum but from the levels. You can see the level of buyers. You have many more levels of buyers versus just a couple of sellers above. I see a pivot point at 4974. From a volume perspective, you can see there's a build of volume. And where we're at right now at 49.68, 69, there's a weak spot in volume. So they might chop between 72 and between 63, 72 to 63 in order to fill the volume void that they have. What they do after that is uncertain. However, the slight chance for the bears is the fact that if they do spend a lot of time chopping in that area, they will establish a fact of selling rallies on the 5-minute basis. So the 5-minute chart would have some sort of a bearish advantage. And this is the 5 minutes. So you would see sellers, lower highs. There shouldn't be a disaster. There was one on Friday, and they erased it pretty quickly. So not only did they erase it, they made a higher high. So taking the bearish bet is really difficult, really swimming upstream. I think it can only be done like a rally into 49.75 can be shorted, maybe down for a few points. But there's not a lot of meat on this bone. It's easier to go long if you want to and see if you get a run and exit and leave runners. That might be something you can do. Nothing easy. If I were you, I would take a vacation for overnight. You can see here how the moving averages are converging. Also, there's energy building. There are sellers at 17,710 and one single buyer at 17,663. If you lose that line, you might end up at 17,620. That is enough points to make money on the Nasdaq, and it's a wishy-washy zone of support. So there is a lot of support, but look how wide the V-shape recovery from last week makes the support pretty wide, but it makes it not a fine line in the sand, except for this guy. So you lose that line, which I mentioned, you will end up down in this V support zone. There is support. This doesn't say resistance. This is, I should change it now because I'm probably going to have to change it by tomorrow morning. All right, so YM was the strongest last week. Now it looks like the rest of them. Dip, recovery, and higher high. Also getting tight. Also one fine buyer at 38,669 here. And if you lose that, the next stop would be 38,600. I don't trade the Dow at all, ever. And especially not the YM. You have resistance, I don't know if I would call it seller, through 38,780. If you take out 38,780, they'll probably push the next peak, which is 38,844. All right, we'll go to crude. I didn't check the dollar. Did it move on Powell? We'll check in a minute. All right, so crude has been selling off, at least for a few hours, and lower highs, lower lows, and they're trying to establish footing in the 71.90 area. There are tails, so I would say higher lows. Lower highs is fine. So now they need to prove, the bulls, if they can take out a prior fail, which is 73. I think it's a tall order, so we'll see. It's doable. So if they take out 73, they can take out 73.6. Now, if you went long on this dip, that's the proper. So if this red tick extends into another test of these tails at 72.20, get long to see if you can get that done. Not sure they can lose these without a headline here or a big move in the currency market. Let's look at GC. Gold took a dump last week, most likely on a currency move, and jawboning from the Fed and interpretation of certain data from the markets, anticipating Fed moves or not moves. The market is still in denial on rate cuts, or they just flat out don't care. Look at the volume void we have above here. We do have a buyer below. The first buyer is at 2050. And a really hard seller at 2059. And if we go above 2059 and a little bit, there's nothing in terms of volume. How easy is it though to recover 2070? I don't know. So it might be easier to lose this bounce and test these buyers, and then the trade will be afoot. Some sort of a head and shoulder ish pattern to fill the gap back there. That is doable. So the battle is, can they take out the resistance, make headway at 2060 before they test and lose 2044? So if you're short, I get it, and you have a chance of making a lower low, and if that happens, the target of that would be in the vicinity of these candles. And then you lose this one, the target of that will be in the 2028 area. So there might be something here. That's probably the best potential if it plays out. So rallies into this peak would be an opportunity to go short to see if you can turn that down. I'll give you a visual. So if this bounces and it doesn't break out, I could take a short with a stop and see if you can do this and drift lower overnight somehow. Triggering this, it's not a given, but if it does happen, we'll give you an opportunity to test these guys. And if you lose these, you will end up in this zone down here. So that's one way to do it. It's all off of this right there. The long play would be to assume that these will hold and you will take that out, whichever you feel better with. I think the sellers have a bit of an advantage here, so we'll see.